Kent, thanks for being with us today.
Dave, thanks again for having us. Glad to be back on the show.
Well, Kent, you're building a portfolio of innovative businesses. What can you tell us about your acquisition strategy, and what do you look for in a new portfolio holding?
We discussed in the past our driver, stabilizer, and facilitator business model, and we really try to fall in line within that model. Driver meaning usually companies that are high potential growth, emerging technology, fairly sexy for Wall Street. Altea, our connected car company, happens to be a driver company, operates in a $9 billion market. We think we'll grab 1% to 2% of that over the next 4 to 5 years. And then we have stabilizers, sticky customers, been around a long time, pretty agnostic when it comes to type of industry they're in. A lot of those out there. And then there's the facilitator, which is kind of our secret sauce. And they're a company that allows our other two types of companies, or even another facilitator company, to vertically integrate without vertically integrating. Really maybe help manufacture or provide a service to one of those companies that they may be paying an outside party for, that would benefit from having it done internally within the brotherhood of Alpine for holding structure. For 2018, 2019, we're still kind of holding true to within a realm of confidence that we'll hit between 41, that's pretty strong, million in revenue, up to 67 million in annualized revenue by the end of 2018.
You sort of answer the next question, which is what's the essential value proposition, or why should investors take an interest in Alpine for today? But again, if you're going to be tracking 50 million in revenue by the end of 2018, that's a pretty good value proposition.
Yeah, the value proposition from my standpoint, and I think a lot of investors, when they look at us, come to the understanding that you're getting a good best of breed investment opportunity. You got your driver classifications that really can help drive, some higher multiples as they get affected on our stock. But yet the consistent revenue for a company like Alpine, at some point we are considering paying a dividend. As we get into the profitability stage, which we're expecting this year. And that's where the stabilizer model really comes of value. And then, obviously being innovative, a company of innovation that has long-term success, the facilitator model really looks at it. So when you add all three of those, we kind of have a best of breed investment opportunity. But yeah, you had also asked us, what do we look for in a portfolio, a type of company for a portfolio? And I want to touch on that because it's a really important question. At Alpine 4, we understand the universal equation for business success. And we really look for those qualities to either exist in a business or one that we can deploy into a business. And so those 4 qualities, the first 2 are pretty obvious. You got to have profit and you got to have cash flow. Now, a lot of people confuse the two. They're very divergent. They work hand in hand, but you got to have profit, you got to have cash flow. The third thing we look for is ease of operations. We know if a company has deployed systems or resides in a market where they can have ease of operations, they usually have a greater success at retaining employees and access to debt capital or equity capital. And so we like to see that in there. Or at the least, we have identified abilities to deploy systems to allow ease of operations. Finally, you need to have a culture of innovation and the ability to deliver a flexible and diverse product or service offering to your customers. We know if you have all 4 of those, you got a successful business that will be there around a long time.
Absolutely. Now, your Venture West Energy subsidiary announced record first quarter sales volume. Talk to us about this milestone and what are your expectations for the quarters ahead?
Dave, we are really excited about Venture West. That company is really taking a foothold. For those of you who don't know about that subsidiary, they provide oil field service and production support to, major oil field services and production companies such as maybe a Continental Resources, Halliburton, larger companies that are in the mix, extracting essentially energy from the ground in the form of oil or gas, natural gas. And Venture West does 2 primary components. They provide water transfer, which would be the inflow of massive amounts of water to a frac site, or flowback, which would be on the extraction side and completion side, where they're taking it and turning and pulling out any of the the water or the sand or the oil and extracting it. So they provide those type of support services to the energy and petroleum industry. They are, trending to have one of their largest quarters ever. And the nice thing about that entity is it throws anywhere from 20 to 25% net profit to the bottom line. So we've invested a lot of time, effort, and resources into that company, and we expect big things from them, not just this quarter, but in coming quarters.
Excellent. Now, in January, you announced the launch of your blockchain-based enterprise operating system. Tell us a little bit about this technology and what milestones lie ahead.
Yeah, that's a unique one. We have been developing since 2016, fourth quarter 2016, our own enterprise business operating system. And I've spoken a little bit about that publicly, but the reality of that system is there is a serious gap, if you will, in the ability to deploy meaningful information in real time and do it in a collaborative effort across many different systems. For example, if you're a larger based company, you might run SAP or Oracle. But while the system can deliver a lot of information, there really isn't a very good collaboration mechanism that it's allowing certain elements within the business to collaborate and work uniformly, if that makes sense. So a lot of time is wasted. We've developed within Spectrum, EBOS, the ability of a very robust enterprise resource planning system tethered to a very strong collaboration overview system, if you will, added a business intelligence platform to deliver meaningful information to the front lines that's pertinent and relevant, and a document management system so people can access the documents all within one system. And then we've taken it a step further and tied it to a blockchain ledger system, which allows us to really give and ensure the integrity of the process, if you will. And we think Spectrum, we're going through beta testing right now in 2 of our subsidiaries, but sometime by 2019, we'll be able to deploy that product. And our target market is essentially the medium to small cap public companies that don't need or want to spend $1 million+ with Oracle or SAP, but need a very robust accounting and enterprise resource planning system, and need the ability to ensure the integrity of the transaction from an auditing standpoint. We think Spectrum hits that mark and will be a very relevant company and a driver company for us in the years to come.
Very good. To recap, Kent, what's the main takeaway for investors? Why should they own your stock today?
As we talked about before, I would say that one of the key pivotal things is rapid growth. All 3 of our current subsidiaries are, trending on 30 to 40% growth. And then you add our additional acquisitions that we are, either in LOI or doing due diligence on right now. I would expect rapid growth, and tied to that, true net profitability, not just an EBITDA level profit, but net profitability. And so that's what you can take away from the next 12 to 18 months.
Excellent story, Kent. Thank you so much for being with us today.
Dave, it's always a pleasure.